Prediction markets platform Kalshi surpassing $1 billion in trading volume since launching perpetual futures contracts last week. It is the first CFTC-regulated exchange of its kind, and just a short time ago, the Journal reporting Kalshi plans to require users to disclose where they work to make certain trades. Joining us here at the NASDAQ for an exclusive interview, Kalshi CEO and co-founder Tarek Mansour. Tarek, great to have you with us. There's a lot to talk about, but I want to first talk about perpetual futures. The $1 billion, that is notional plus leverage, just to be clear in terms of that number. So the demand is there. There have been a lot of criticisms. We had Terry Duffy on from the CME last week. Can you talk to why this product is suitable for the retail investor when it has been around the world? The UK, for instance, has a ban on it. The EU has concerns over it and limits leverage. Why should it be offered here in the US?
Yeah, well, so yes, we are honestly, the results have been incredible. Billion in 5 days, and you might know this, but our prediction market product took 3.5 years to accumulate $1 billion in notional volume. The demand is there, and actually offshore, in some of a lot of European jurisdictions and others, perpetual futures have been legalized and they've grown dramatically, and they're doing $90 trillion of volume now. So the demand is clearly there, and the question is why. The main thing, like the way that perpetual futures are different from futures, is that they don't expire. And so they're simpler for a retail participant and institutions. Sometimes you have a view on where something is going and by when, but a lot of times you just have a view on where something is going, not exactly by when. And futures, the issue with them is that they force you to basically have a view on when. So you have to close out the position and open it again if you want to hold it for longer, which makes you pay fees. Whereas perpetuals avoid you those fees. So at the end of the day, they're simpler, they're cheaper, and they're more accessible for consumers. And I have a lot of respect for Terry. I think he's built an incredible company. And but I think the incumbent don't love them because of that specific point, which is futures have to roll over where you pay fees, and perpetual put competitive pressure on those fees. But at the end of the day, they're improving consumer costs, and that's where we see the world heading.
Some would say that the funding rate mechanism in and of itself can erode any sort of profits, or it can really eat away at the position of the retail investor without them understanding that that has to exist in order to tie that contract to the spot price of whatever they're trading.
That's not a new mechanism. I mean, there's two main criticisms, right? There's the leverage that people talk about. Are these products have too much leverage? And then the funding rate mechanism and default, the margin model. So 2 points, and I really think it's not about that. So leverage, we're offering around 6x leverage. That's what we're offering in these products, which is actually lower than a lot of retail futures product on CME. So S&P futures are 15x. I mean, Dan, you might know this. I mean, I think FX is 60x, gold is 20x. So all of which are actually higher leverage than these products. So I don't think it's a question of leverage. And in terms of a risk model, I mean, this has always been Kalshi's approach. We're not trying to innovate on the risk methodology. That risk methodology that we're using, the auto liquidation model, is actually a replica of the robust, well-tested model that CME and some of the incumbent exchanges have used at the CFTC level. The innovation really comes on this expiry point. They just don't expire, which helps people essentially avoid paying these fees that we just discussed, avoiding these rollover fees.
Tarek, you guys, obviously sports has been a great way to start. How do you think about finance, markets, economic stuff? Because it's very small for you guys right now. And do you see like a big opportunity there?
So the growth in like the finance markets for us is actually one of the largest. Actually, they're growing faster in sports, faster in politics, some of the other markets. So the opportunity ahead of us is massive. I mean, the mission and the vision of Kalshi has always been, we want to build a next generation exchange. An exchange that captures a broader set of assets that is simpler and more accessible for the average consumer, and that is dynamic. It's capturing the things that are happening around people's lives that they understand and they relate to. And so, yes, our Act 1 was prediction markets. We've grown a lot during the 2024 election, and politics was a huge sort of propeller for us. Sports was incredible. And now with Perpetual's launch, I think it's really spearheading us into our entry into more financial-like products. And as you've seen, $1 billion in 5 days, if I'm here in a month, I think those numbers and percentages will look very different.